quick observation on the UK and a bit of a difference there. There are a whole group of specialist funds and REITs, maybe a small group, but nevertheless, who are particularly focused on retail-led logistics, and that doesn't necessarily mean e-commerce, but retailer-led logistics. And it's really clear in the UK market, those specialist groups are paying the best prices, and they'll compete with annuity funds and pay low 6 net initial yields for 8, 9, 10-year income, and if you can get a 15, 20-year lease, they're down into the very low 5s. I mean, that's back at peak pricing. I think there aren't those specialist retail-led buyers paying premium for retail occupational uses yet in Europe, but the funds in the UK that are doing that, it seems to be an effective business proposition and thesis, and they're able to raise quite a lot of money on the back of it. So I would imagine there'll be niches and specialisms and more boutique shops setting up to try and capture that trend in Europe as well, because the dynamics are fundamentally the same, subject to the more difficult planning situation in the UK. I think they're looking at how retail as a sector and retailers are priced in other sub-sectors, and they just see a total mispricing of the same kind of, or as a fundamental part of the supply chain and retail operation being mispriced to a big degree. So they think there's a yield compression and arbitrage there, and that it'll mean a fundamental repricing across the market. That's their argument, and to a degree so far they're being right about how those kind of opportunities are being pursued.
It's definitely more competitive. The weight of money that we're experiencing at the moment is much more than the boom periods of 2007 for logistics. And so that is having an effect on pricing. I think, as I say, I started with Philip's comment, I think we're going to see yields in new places for logistics they've not been before. And actually James and CBRE helped in that in the beginning of the recession when they started doing research on logistics as an asset class. And that's something that James did do very well on. Give him his pat in the back there, James, but pay me later. But it's true, until the recession, people hadn't looked specifically at the long-term returns on warehousing as compared to retail and offices. And I remember, correct me if I'm wrong, but the figures were over a 10-year return. I think it was 8% returns for retail, 7.5% for logistics, and 5.5% for offices. And I think that made a lot of people think, well, actually, that's a huge difference. And therefore, that made a lot of the investors from, especially North America, and as you know, we've also been bought by Americans and Canadians. And I think that's what's made them look at the markets compared to their own markets and see an opportunity. And that will continue to put pressure on prices, especially as the supply has completely dried up. And there are build-to-suits being built, but most of those aren't going to trade. And whereas what were trader developers, and Gaisley, my old company, was one of the biggest, they're now Brookfield owned. They're not going to be trading, developing. So it means there's a lack of product coming to the market. And certainly Prologis ourselves, if we develop, the chances are we'll be keeping it in our own funds.